All right, we are live. I believe we are live, actually. Not so sure. Yes, we are live. Okay. Hello, everyone. Welcome back to another live stream. January 2nd, first stock market open of the year. So welcome back. Good morning, good afternoon, good evening, wherever you are. I'm happy you could join. Thanks again to all of you that have joined the live stream. Yesterday was a pretty good and long one as well. If you haven't watched that, it's in the live stream playlist, because most of the live streams will be unlisted after a couple of days, so it doesn't screw up with the YouTube library. And I'm going to wait until a couple of more people join, and then we're going to start the session. I don't know why I hate this. I mean, I think there is a little delay with the audio, but I'm not sure with StreamYard. Let me check the settings. I don't think there's something I can change here, but never mind. Florian already with a question. I'm curious on your view on Embracer, amazing IPs, Lord of the Rings, Tomb Raider, etc. I mean, I think we talked about it on Sunday. In my view, super deep value isn't the market exaggerating too much. I think we talked about it on Sunday with this one. I believe it's the company that is cutting some studios, right? Because some deals didn't go through. The Swedish company, yeah, they own a lot. They own a lot of names. Yeah, could be a good pick for on the European market. That is, I believe, right? I see here one on the Frankfurt market. I mean, since October, it has gone up 100%. So there is that. Welcome. In the meantime, let me maybe show you what the market is. Put me right here, much better. What the markets are saying right now. Futures are down. Futures are down for now. We've got S&P 500 down almost 1%, Dow future 0.6, and Nasdaq 1.1. Oil $73, gold 2,075, euro dollars 109, the 10-year 3.96. Whoa, interesting. VIX still pretty low, under 14, and Bitcoin over 45,600 right now. So very interesting. Job reports to test the rally. Interesting. When will we get that number? Friday morning.
Jan 12th kicking off there, but we got some results coming in next week too. ConAgra and Walgreens both reporting on Thursday ahead of the open. Then washing it all down with beer importing giant Constellation Brands reporting on Friday. Then we go to the economy, the job market. The Bureau of Labor Statistics releasing its monthly JOLTS data for November. Job openings expected to rise roughly 8.8 million from the 8.7 million in October. Sticking with jobs, we've got ADP next week, and then on Friday, monthly jobs report for December. The economy expected to have added 168,000 jobs this month, which would be a slowdown from November. Unemployment rate expected to tick higher to 3.8%.
Okay. Don't know why it stopped like that, but okay, fine.
A new paper out
Jarvis asked, is stock market overvalued right now? I don't think it's overvalued, but it has gone up a lot pretty fast. That's for sure. Probably some stocks are overvalued, but overall, I wouldn't say overvalued just yet. Ooh, Apple got downgraded. Let's see why. And probably because the Apple
Would
Watch.
get the stay of execution when it came to the ban?
Yes. So on December 26th, the day after the ban actually came into place on Christmas Day, Apple was able to file an emergency motion to appeals courts in Washington to get this ban temporarily stayed. Now, this temporary stay is going to last until January 10th at minimum. So they're going to get an extra 2 weeks of sales thanks to this stay that they otherwise would not have. This was anticipated. Apple made a fairly good argument. They showed in previous cases where injunctions had been in place, how this same court did grant temporary stays. So yes, it was pretty clear to me, and I think a few others, that this would happen, and it indeed happened this morning. We're still waiting to hear back from Apple to see if they're putting the watch back on sale immediately, if it'll be later today or tomorrow. It's a pretty arduous process operationally to get the thing on the online store, remove it from the online store, get them back in retail stores, get them out of retail stores. So we're going to have to just wait and see how long they're going to play this cat and mouse game for.
Hey, Mark, is there any reason to believe the parties here, Apple and Massimo, can come to some kind of settlement here, monetary settlement?
Yeah, at this point, given that Apple is having some success in the legal proceedings here, I think that makes a settlement more and more unlikely. You can see Massimo's stock fell as much as over 6% this morning. I think some people who bought Massimo's stock banking on additional long-term revenue from Apple are starting to realize that's simply not going to happen. And so certainly, I think, like I said, a settlement is less and less likely.
Okay. You can see he also has a Kobe jersey, and he has the Tesla tequila as well. So Barclays analysts cut their rating on Apple to underweight and price target to $160 from $161. Wow, incredible. Look at this. A $1 reduction. Wow. That's definitely worth the headlines. Definitely worth the headlines. So he's implying a 17% decline over the next year. The stock dropped as much as 1.4% pre-market. We expect reversion after a year when most quarters were missed and the stock outperformed. That's very true. Our checks remain negative on volumes and mix for iPhone 15, and we see no features or upgrades that are likely to make the iPhone 16 more compelling. Been saying this for quite a while, but I guess nobody wanted to listen. Good morning, Justin. Could you look at Transmedics or Synopsys? Transmedics, is that TMDX? Yeah, that is TMDX. Wow. Yeah, I remember Transmedics at $15. So I guess they managed to succeed. Does seem so. But I guess you want to see the overview. So let's go on Coifin and let's put TMDX. Voila, much better. So Transmedics. Let me put your question here. Let me remove my face. Transmedics market cap 2.58 billion. Revenue will increase quite a lot, it seems. Analysts are expecting to increase, to basically double from fiscal year 2023 to fiscal year 2025. And then in fiscal year 2025 to actually have positive EPS of 54 cents. So lots of growth ahead for this company. If we look at some metrics that we got, the only one is price to sales, which is cheaper than their 5-year mean, but still not that cheap. I mean, 8.3 times, but since they are expected to double their revenue in the next 2 fiscal years, okay, I guess they get that premium. EV to EBITDA sits at 53.2 times. So yeah, definitely whatever they were working on worked out. Revenue, big increase. Free cash flow, not that great right now. Return on equity is still negative. I mean, this is not great either, right? Last 12 months, gross profit margin, we were closer to 70%. We're now at 66%. With return on capital close to break even, negative 1.5%. Analyst expectations. Average price target sits at $90, which is a difference of $14 on the upside. So that's Transmedics. If we look at Synopsys, this is a much bigger company, of course. $78.2 billion in market cap. Last year, it went up 61%. Forward PE 38.2 times. And here, of course, sales growth much lower than Transmedics, but that's normal, but still quite nice for the next coming fiscal years. 12 to 13% year-over-year growth. EPS faster than that. You've got 20, 15, and 22% year-over-year growth for the next 2-3 fiscal years. The average analyst price target sits at $614, let's call it $615, which represents close to a 20% upside from the price we're at today. Of course, a very much profitable company, which probably means that they can buy back their shares. Free cash flow per share has gone up. EPS, 5-year growth rate 17%, so that's fine. It's actually very nice. But it does seem like the forward PE, EV to EBITDA price to sales is much higher. Not much higher, it's higher than the 5-year mean currently. So maybe the stock has gone up much faster than the business. If you look at the 10-year mean, yeah, it's much more expensive today. Much more expensive today. Maybe there is a reason, maybe not. I don't know. I haven't really looked into the company much deeper than what we're doing right now. Gross profit margin has improved a little bit, but has come down previously. So let's see if that can continue to improve. That can maybe justify the premium that it's getting right now. So there you have it, Synopsys and Transmedics. This is basically the big overview of what's happening right now in the market. Again, if you have questions, let me know in the chat. How was your New Year's weekend? For everyone, I'll actually write it here. Mark here. Happy New Year. Happy New Year to you as well. Would you still start a position in Nvidia or AMD at that price? I wanted DCA, dollar cost average, into both of them, but not sure if I should wait for a bigger pullback first. So I get I get this question close to in every live stream. So I'll just show you. Both companies, how expensive or how inexpensive they are. So I'll remove your question for better visibility. So some of you might be surprised, some of you not, but Nvidia is cheaper than AMD. That's basically what I wanted to say here. Nvidia is cheaper than AMD. If you look at 4 PE, EV to EBITDA, price to sales actually Nvidia is a bit more expensive, But EV to EBITDA next 12 months, 19.2 times for Nvidia, AMD 52.7 times. Then a forward PE for Nvidia sits at 25.4 times compared to 44.3 times for AMD. With regards to price to free cash flow, Nvidia is also much cheaper, 69.8 times. That's in the last 12 months, whereas AMD 180.1 times. So currently, just looking at this, makes more sense to buy Nvidia because it is much cheaper now. That said, I've said for the last 6 months already that if you do not have a position in Nvidia, starting a position in Nvidia right now, I mean, the upside in the short term will be probably limited because of how much it has gone up. But fundamentally, the company is doing much better than what you would think, especially for a company that has gone up 240% in a year. So yeah, that's that. Let's see what the analysts are expecting for Nvidia. Average price target $658, representing a 33% increase in the share price in the next 12 months. With regards to AMD, average price target $136.3, representing downside of 7.5%. So yeah, pretty safe to say that the market favors Nvidia right now. With regards to growth rates, which you can see here bottom right, analysts are expecting for AMD fiscal year 2024 sales growth of close to 17%, EPS 43%, and fiscal year 2025, same thing for sales and 34.5% growth for EPS. So we've got sales up 17%, EPS between 43 and 34, and with Nvidia, it is, as you can see, much better. Sales growth 54.2% and close to 20%, and then EPS 62% and another 20%. So you can understand why Nvidia's valuation is also much better. You can understand why the analysts are more in favor of Nvidia. Of course, if you want, we can go look at Intel. Intel, of course, at the bottom line, they're going to outgrow the other two. That's just because, well, fiscal year 2023 has been a complete disaster. So yeah, there is that. The price target for Intel sits at $40, which represents a downside of $20.35. But with Intel, I do think we're going to get a lot. As you can see, 44 analysts, 26 of them have a hold rating. I think we're going to see a lot of new price targets after the next earnings report, plus a outlook for 2024, which should flip the switch for most analysts. That's just my opinion. So yeah, we'll see what happens. But to answer your question, if I had to start, I would probably still buy Nvidia and just keep it. But yeah, wait maybe for a bigger pullback, I would say. Because again, it's a company, it's already in the trillions of dollars in valuation. Right now, it is in a, let's say, very, very dominant position. Very, very dominant position. I don't think they're going to stay in that position forever, right? Companies like Amazon, Microsoft, Google, AMD, Intel, they're all in the chip making / chip designing sector right now, right? Every cloud player is designing its own chips. So, of course, Nvidia has software and hardware best in class right now. I don't think they're going to go away anytime soon, but maybe they might be close to their, let's say, peak. Because remember, they have to sell to their customers. And if the big customers think, look, we're not really willing to pay that much anymore, then yeah, maybe it will get hit. But right now, there are definitely no signs of them slowing down. There has been actually some news. I'll share this with regards to Tesla's deliveries has come out. So Tesla tops Q4 deliveries expectations and ends 2023 with 1.81 million vehicles moved. So it disclosed that it produced 494,989 vehicles in Q4 and delivered 484,507. They had to deliver 475,000 to reach the goal of 1.8 million vehicles. So, okay, that beat. The consensus was 483. So, okay, that's good. Model 3 and Model Y deliveries accounted for 95%. For the full year, vehicle deliveries grew 38% year over year, while production grew 35%. January 24th is when we'll get the earnings report for Tesla. Okay, so right now the stock is up 0.3%. 0.3%. That's not that much, but okay. I guess we'll take what we can. So yeah, Mark, I hope you're happy with the answer or not. I don't know. What else? What else do we have here? Thank God Elon didn't reiterate, didn't upgrade the 1.8 million number at the start of the year, because he did hint like, oh, maybe 2 million. I was like, oh, please don't. But no. Okay, so here's the official page. So they produced 15,000 more Model 3s and Model Ys. Other models, they actually delivered more. Okay. And so overall, yeah, inventory grew, but still not such a big deal, in my opinion. Not such a big deal. Now that this number is official, 1,808,581, what do you think the number for 2024 will be? 2 million, 2.1, 2.2, maybe more than that? I mean, forget about the 50% right now growth, because that's not going to happen now. Maybe in the future we'll have even more than 50%, but currently, how do I do this? Yeah, currently, I mean, 1.8, I'll probably put my expectations at 2.1 for next year, with a refresh Model 3, ramping up Cybertruck, still Tesla Model Y, one of the best sellers. Maybe a refresh as well could help. Yeah, I would say 2.1 should be a good number. If you have your own expectations, let me know in the comments below. We have some Rivian news as well. One second. Yeah, so Rivian, their stock dropped 7.4% right now. 7.4% after slight miss with Q4 deliveries. So the company said it produced 17,541 vehicles at its manufacturing facility in Normal, Illinois, and delivered 13,972 vehicles during the same period. The delivery tally was slightly below the consensus expectations of analysts, 14,111. On a full-year basis, the electric vehicle upstart produced 57,232 vehicles, delivered 50,122 vehicles, which topped the most recent full-year 2023 production guidance of 54,000 vehicles. So huge congrats to reach that milestone. And then they'll report earnings February 21st. So still some time. Still some time for them to report. Stock is down 7%. I remember some guys said that maybe choosing Rivian over Tesla in the short term is a better thing to do. Wonder how that works out. Oh yeah, okay. So thank you for the reminder, Mark. ASML, because there is some news with them as well with regards to China. The restrictions there. It will keep its mode 100%. And with regards to the China ban, let's read here together. So China has asked the Netherlands to respect market principles. I always find it so funny, right? China, out of everyone, asks other countries to respect market principles when basically close to no Western countries can enter the Chinese market the way Chinese markets can enter Western countries. I mean, the hypocrisy here is just sky high. Anyways, the Dutch government recently partially revoked an export license of some lithography system to China. ASML stock fell about 2%. The Netherlands-based company said on Monday that a license for the shipment of these lithography systems in 2023 was recently partially revoked by the Dutch government, impacting a small number of customers in China. However, ASML noted that it does not expect the current revocation of the export license or the latest US export control curbs to have a material impact on the outlook for 2023. On the Dutch government's actions, Chinese foreign minister spokesman said to urge the Netherlands to be impartial, respect market, blah, 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 blah. I mean, the CCP really, they can go F themselves. ASML did not say which customers were expected to receive the machines, but its customers in China include semiconductor manufacturing international corporations and others. China has been ASML's third largest market after Taiwan and South Korea. Makes sense, Samsung, TSMC. However, it was the largest in the third quarter of 2023 with 46% of sales. Now remember, ASML has a backlog of around 38 billion euros. So again, I don't think it will impact anything in the short term. They said here in October that the export control measures would likely have an impact on the regional split of its system sales in the medium to long term. However, it does not expect these curves to have a material impact on its outlook for 2023 and for the long-term scenarios for 2025 and 2030. I think there is enough demand for those machines around the world that if it does not go to China, then it would just go to another company in the West or Taiwan or South Korea. So yeah, I don't think. I mean, if it hurts the stock, right? What's now? It's down 3.7%. If the stock goes down way more, I mean, it was up 37.25% in 2023. So yeah, I mean, if it goes back down under 700 for some reason, yeah, probably. I think could be a good opportunity. Could be a good opportunity for the long term. This company is definitely not going anywhere. And then, as always, these exports. There's also elections in the United States, so maybe relationships might change, new rules, we'll see what happens. But I think a good enough dip is a good opportunity to buy such a great company, in my opinion. So Wedbush, is it Dan Ives again? Yes, Dan Ives, as always. So he thinks that the Nasdaq could hit 20,000 in 2024. While we can see ebbs and flows in the coming months given Fed job-owning macro factors, we believe tech stocks will be up 25% in 2024. This is their bull case scenario, as Wall Street is still significantly underestimating how quickly this AI monetization cycle is playing out among enterprises in the field. Apple, Microsoft, Google, Palo Alto Network, Palantir, Zscaler, CyberArk, CrowdStrike, MongoDB, those are the names that Ives has listed as their favorite tech stocks in 2023. No Tesla in there. Interesting. I still don't see why he always puts Apple as his top thing, but then again, I don't really understand a lot of what Dan Ives says. C3 AI is the LeBron of AI, and Palantir is the Messi of AI, or stuff like that. It's just ridiculous. Good marketing strategy, but ridiculous in my opinion. So yeah, we'll see. We'll see what happens. Because right now we're at, yeah, okay, 16.6. 3M analysis could be an easy 50%. Could it be an easy 50%? What is it, MMM? Yeah. Currently, what is it? Dividend yield, nice dividend yield actually. An easy 50%. So last year it was down just 9.3%. In the last 5 years, it's down 42.63%. There was a lawsuit against them, no? Or something. They had to pay billions of dollars in a settlement or something, if I remember correctly. What's the latest here? So it's in December, it sold 50% equity stake in Combi Packaging System. Okay, nothing much here. Let's have a look on Coifin. By the way, if you want to try out Seeking Alpha, 7-day trial, link in the description. And then if you want to upgrade, there is a 30% offer off for the New Year's. You're helping me and you're helping yourself out. So let me put this in the big screen, remove myself. So right now, 3M, pretty famous company, $60 billion in market cap, forward PE 11.2 times. Sales growth, I'll remove your question for a bit so you can see here bottom right, sales growth in the next coming years, 2 to 3% year-over-year change. Bottom line will increase much faster, 7.6, 7.7%. Okay. As for the dividend, the dividend yield sits at 4.49%. Annualized growth in the last 10 years has been 9.15%, but closer. Last 5 years, only 2.65%. So yeah, the last couple of years, dividend increases have not really been the thing. So bear that in mind. Let's see the price targets from the analysts. 19 analysts, 16 have a hold rating. So yeah, most of them are waiting on the sideline. As for shares outstanding, they've been buying back their shares in the last 10 years. Free cash flow per share has decreased in the last two years. So definitely something happens. I know there was a big fine they had to pay. I don't remember how much, but they had to pay. As for valuation-wise, PE, EV/EBITDA, price to sales, all cheaper than its 5-year mean. Even price to free cash flow. So Yeah, if you could tell me what has happened, that would be great. Let's see, maybe I can find myself. Okay, so yeah, it paid $10.3 billion to settle water pollution suit. Okay, not that cheap. Legal troubles payments. What happened with that? Okay, so in August 29th, 3M agreed to pay $6 billion to settle the lawsuits per the company and lawyers for the that's earplug lawsuit. So they paid $6 billion for this lawsuit and $10 billion for the other lawsuit. Okay, that makes sense why the company got hit. But it has been going down for quite some time now. It has been going down since 2021, basically cut in half. So yeah. Could be an interesting pick though. Could be an interesting pick. Let's see, yeah. I mean, since 2021, revenues have come down significantly. Return on equity, of course, as well. So yeah, could be an interesting pick. Maybe I'll cover this more in another dividend video. So thanks for that question. Let's see what else popped up this morning. Let's see. Right now, future is still red. Yeah, so that's the one I talked about right now. The 6 billion is for the earplug thing. That's the 6 billion, and then the 10 billion was for the water pollution. If there is another one that I have to know about, then let me know. But I think $16 billion in the fines in 1 year is enough for them. But I think the market likes. I mean, it's not great, but at least it's over, right? You pay the fine, it's over. Let's continue with what we're doing. So I think that's why the stock had a rebound already last year. Let's see what the people on Yahoo.
Biotech are sectors to watch this year. Now we want to dig in to these picks and more when it comes to some of these topics. Maddie, we know investors are doing their best to position their portfolio for some of the gains that we could see here ahead over the next 12 months on this call out from BTIG. What caught my attention were those two particular things when it comes to healthcare and biotech. And here's why. We've talked so much this year about the tech sector, the Magnificent Seven, the lack of breadth that we saw in the market when we saw this massive run up, especially in the first half of the year. And then, of course, to end the fourth quarter. But they're saying that, hey, even though healthcare underperformed back in 2022, didn't do a heck of a lot in 2023. They're making the case that healthcare is positioned for future gains heading into 2024, that we could see this breakout of the trading range that it has been stuck in. And then also biotech, the BTIG saying that they do see biotech potentially emerging from this bear market that biotech has been in over the last 3 years. We have started to see more and more M&A activity pick up a bit there within the sector. Anjali Kamlani, our colleague there, reporting a bunch on some of those Zeneca. But then also just in terms of some of those individual names that they see, Legend Biotech Corp and Stoke Therapeutics, not necessarily stocks that are household names or are really known to every investor out there. So they are seeing some of those hood or maybe some of those lesser known plays as positioned, at least they're making the case positioned well to really see a breakout this year.
Yeah, we had an analyst on the evening show on Friday talking about how biotech is really positioned to have a great year heading into 2024 because of the amount heading into.
Yeah, okay, their live stream sucks. I mean, it's always repeating. Yes, exactly. That's what I said. Now that the fines have been paid, you know how much. That's why it's better. So yeah, and these are basically the picks that they've talked about for the MedTech stock. Hi Martini, did I miss much? Yeah, a bit. Tesla deliveries beat expectations. Rivian's deliveries did not beat expectations, so the stock is down 7%. Futures are currently a bit red, down 1% or so. Market will open in 2 minutes. ASML China restrictions, stock is down 3%. That's basically the gist of it. Yeah, so these are the picks right here. Never heard of any of those. Mark asks here, what do you think about United Health, I assume, and Pfizer? So Pfizer, someone asked me this yesterday, maybe you as well, I believe. Good dividend yield. Stock was hit because, well, obviously you cannot get billions of dollars from vaccines each and every year. I mean, imagine if we were forced each and every year. But yeah, could be a good pick. With regards to United Health, this is basically the last year it was flat, basically. Dividend yield 1.43%. We're in a second. We'll go and look at the Coifin one. United Health divests Brazilian operations with $7 billion charge. Okay, so I see that a lot of these companies are taking these types of hits. Morgan Stanley positive on healthcare services despite election year. And they talk about United Health, Humana, CVS, some others there. Of course, the weight loss drug, I think, with Novo Nordisk and Eli Lilly, they've been performing quite well already. But yeah, we'll see what happens. So yeah, you asked, I shall provide United Health. Pick, bam, pop. So United Health. Market cap $488.7 billion. Forward PE 19.5 times. In the next fiscal years, year-over-year growth of 12% for EPS in each of those years. As for sales, slow down. So fiscal year 2023, you can actually see this right here. Fiscal year 2023, 13.74% year-over-year growth. Then in the next 2 years, 8% in each year. Average price target for the analyst sits at 588, representing an 11% upside. If you look at the dividend, in the last 10 years, annualized growth 21%. In the last 5 years, 16.43%. So definitely, despite seeing just a, let's say, small dividend yield, 1.42%, the growth there is quite significant. Now, you see that the shareholder yield is negative 0.35%. That's because of their debt pay down yield that took down basically the buyback and the dividend yield. But in the last 10 years, you went from 28 cents to now $1.88. So quite a major improvement. If we look at the metrics, basically as cheap or as expensive as the 5-year mean on all metrics here. On all metrics. If we look at the buybacks, free cash flow, you can see in the last 10 years, even in the last 5 years, they've been buying back their shares. Result, free cash flow goes up even more. The EPS 5-year growth rates, 11.23%. So definitely a very, very strong company, strong pick. Could go, can you pick it up cheaper? Maybe, maybe not. Maybe healthcare will have a great 2024. We'll see. We'll see, because like I said, in 2023, it was flat. Right now, this is live. The markets are open. We opened basically flat, as you can see. We are flat. There's actually a lot of red, in every market. France, Australia, Japan, United Kingdom, Germany. It's red, but it's basically flat because it didn't really move that much. If we want to look at the portfolio picks. So right now, portfolio picks. The only ones in green, let me sort this. The only ones in greens is Lemonade, Ultra Group, Deere & Company, and Adian, basically flat. The ones that took the bigger hit right now at the open, AMD down 3%, Alibaba down 3%. Wonderful way to start the year. Palantir down 2.7%, Square 2.6%. Yeah, all those stocks here, 2.6%. SoFi, Square, Apple, Roblox. If we go lower, Nvidia down 2%. Tesla down 1%, despite beating expectations for deliveries. So yeah, we're starting the year on a on a red note, shall I say, on a red note. But it's fine. I'd rather start the year bad and finish strong. Gives me opportunities to buy great companies at a cheaper price. What happened with those Bitcoin miners? Been hearing about the Bitcoin miners for the last God knows how long. Okay, ooh, wow. Last year, Marathon Digital up 683%. Sheesh. But in the last month, it's up 70%. Okay. Pretty impressive. So yeah, that's basically what has happened right now, pre-market. Now the market has opened. As you can see, markets are flat but red. To be honest, not much to say. Stocks are down. Which one? Apple is down the most, probably because of the Apple Watch. Coinbase is also down, but I believe a lot of the Bitcoin pricing, crypto coming back has been priced in my opinion. So yeah. That will be it, I think, for this session. Again, the video about Coupang and C Limited is live on the channel. Tomorrow, I don't think I'll do a live stream because I will be pretty busy. But there will be a video that will go live. I don't know about what yet, but we'll see. We're going to come back with the live streams on Thursday. Right now, don't be alarmed if you see stocks red down 2-3%. Remember, in the last 2 months, most of these stocks have gone up more than 30, 50, even more than that. So we're bound for a little pullback. New Year, stock market will do what the stock market will do. We're going to have earnings report later this month, new earnings season. So be excited for that. As always, thank you all for joining. Hit that like button, subscribe if you're new here, and I see you all in the next one. Bye-bye.